Good afternoon, everybody. Uneducated Economist here. So I came down here to upload my video because I was getting some pretty bad service over at the house. So I came down here and was reading some articles while that video was uploading, and I came across something that I thought was really interesting because one of the articles is coming out of China and the other one is coming out of the United States, but both of them sound very similar to each other because both China and the United States, the Federal Reserve Bank here in the United States, is going to end their repo facility on the same day, practically the same day this gets announced. So now I think about this. Why did they set up and start the repo? Because there was a lack of liquidity in the banking system. See, September of 2019 had government spending at a high, and the banks were loaded with treasuries, but they didn't have a lot of cash. And that's when the Federal Reserve came in, because pretty much what happened was that banking lending started freezing up. There wasn't enough liquidity in the banking system in order to provide all the overnight lending that was needed in order to basically make these banks whole every night. It's kind of a complicated process, but that's essentially what happens is that banks on an overnight basis will lend money to each other to meet their reserve requirements. Now, things have changed a lot since then, but that's essentially what was happening, in that these banks all of a sudden said, hey, I don't have anything to lend you. And these banks were in need of liquidity for the next day, needed cash to do business. They were willing to pay any price to get this liquidity, and interest rates shot up to 10%. Now, if that was to continue, then that would have leaked its way into the rest of the economy, meaning that home loans, car loans, everything else would have started shooting up as far as interest rates go, and nobody would have been able to afford these things, and the economy would have started to freeze up. Same thing happened over in China with these repos. So they had the repo thing going as well. But now they're ending those facilities, and to find that they're doing it at the exact same time only leads me to believe that they must have done it on purpose together, and that the reasonings that they're doing is to try and keep the markets from swaying one way or the other. If both the largest economies do it at the same time, they can set precedent for the rest of the world. Now, I don't know if this is true or not. I just find that these two economies doing it at the exact same time very interesting. I mean, to say the least, that doesn't really happen. So here in the United States, with the ending of that repo, it only makes sense to me because really you don't need the repo facility anymore, considering you got quantitative easing. I mean, with quantitative easing, the Federal Reserve is essentially buying up all the treasuries needed for the banks to stay liquid. So I don't even see a point of a repo facility. But yet the Federal Reserve has, even not too long ago, talked about having a standing repo facility. Like, there's one that is constantly in operation. So I found that kind of interesting that they end it now. Because to me, I could see them, like, say maybe taking it down to a very limited basis, but then always having that facility to, to fire up or to make bigger. But to think that they were going to end it altogether is just, it's surprising to me, really. And I can understand why China is doing it, because they're like, irrational exuberance is really starting to kick in right now. And you got corporations defaulting all over the place on account of the low interest rates that they've been hoarding on, or, gorging on is what I should say. Interesting times to say the least. Had you gone back 10, 15 years ago and asked an economist, or just even told them, hey, we're going to see negative interest rates in corporate debt here in about 10 or 15 years, they would have laughed you out the building. They would have, you would have lost all credibility. Nobody would have believed a single word you had to say after that. And now I find it interesting that negative interest rates is almost like the expectations. Like, people are anticipating that there's going to be negative interest rates coming into the future. And I have my doubts about that. I mean, you might find it in some of these economies, you might find it in some corporate debt, you might find it some places. But the only way that you're going to see negative interest rates come to our deposits, like our bank deposits, like our checking accounts, our savings deposits and stuff like that, is if we're in a 100% digital currency. And since we aren't even remotely close to that, I don't see negative interest rates coming. See, if negative interest rates hits your deposits like that, you just pull your money out in cash. Because even though cash doesn't carry an interest rate, it certainly doesn't carry a negative interest rate to it. So why would you keep your money in the bank? That's why I just don't see interest rates going negative to that sort of level. Not until we have full-on digital currency and no cash left in the system. So that's a long, long ways away. I don't see that happening anytime soon. But what I do see happening soon is too much liquidity, which is starting to show itself, especially when you think about China and the Federal Reserve both doing this ending of the repo at the same time. Now, I do think about that. And I do think if there's too much liquidity starts rolling out there, next thing you know, the interest rates are going to start rising. And I can already see it starting to happen over in China. Because if they start, taking away that easy money, well, pretty soon there's going to be people out there who are desperate for cash, who are going to be willing to pay a higher interest rate or forced to pay a higher interest rate, and they will do it. It's because it's either do it or go out of business, one or the other. Easy money, low interest rate world cannot and will not last forever. Now, this could be just a very early warning sign and may reverse itself and go back to, firing up the repo, because I really do honestly believe that the Federal Reserve would like to have a standing repo facility, something that is always there and part of their just daily toolkit. Because that's what I think the Federal Reserve would truly want. But right now, they're not doing it. They're taking away that repo facility, and they're ultimately saying by doing that is that there's plenty of liquidity in the market right now, and we need to start letting interest start to find their own place. I doubt they're going to let them rise very far. I can't imagine them going up very high very quickly, but they're done with they're done taking it down. I think they're done weakening the dollar in their attempts. There still could be plenty more to go, especially if we have some major event take place or something like that. But I honestly think that between seeing what China just did and the Federal Reserve doing it at the same time, that we have a bit of a shift taking place here. And I just don't see it going down much farther than this. I think we're starting to move the other way. Anyway, Uneducated Economist, you guys let me know.